It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, November 12th, 2015. Wrapping up this holiday shortened week. Hope you guys and gals had a safe, restful, and celebratory Veterans Day. Happy Veterans Day out there to everybody. If we didn't see each other on Tuesday. Back from the break. Boy, oh boy, these markets are not giving up. It looks like Yellen and Crude are going to be maybe forced to raise rates in December. Another strong JOLTS report today. We saw almost a record-breaking JOLTS report, the Job Openings, Layoffs, and Transfers Survey, my gal Yellen's favorite news report. Markets are really moving this time of the year. Remember, this is the best time of the year to be a trader. The last quarter of the year and the first quarter of next year are always going to be the best time to be alive and kicking in these financial markets. We get a great newsletter for you guys and gals tonight. You know how we roll. Every evening is always a great way to get ready for tomorrow. Crude is range-bound this evening with a bearish bias, and sellers are currently trying to break to new lows. Now, heads up on these bears on Crude, because if they fail, we will likely see a run back to the high of the range before we go lower. We might see some definite shenanigans here on Crude before we go into this session tomorrow. The S&P 500, also another bearish market this evening, but the sellers have two measured moves down acting as support, which tells us the sellers are likely to be taking profit into the closing bell tonight. Buyers will start hunting for those bargains. And my guess is we're going to see a bullish correction higher before looking for additional selling opportunities on Friday for the E-mini. How about the yellow metal? Gold is bearish and range bound this evening. Wait till you see what we have on gold tonight. We have a huge clue this evening. The party just might be over in the short term for the bears. And the buyers look quite eager to run these sellers out of their post non-farm payroll news positions before going back lower again. That's right. All those sellers who got short on the non-farm payroll report a week ago, they are really shaking in their boots for tomorrow. We get a plan for gold. And of course, the euro. How could we forget about the euro? The euro, a very interesting market now that the leverage is on the side of raising rates in the U.S. And of course, you got my boy Draghi still talking about further negative interest rates. By the way, I still can't figure out how that works. Not to worry, though. We get a plan for the euro. Euro is bullish this evening, so our plan is to use channel rotation, major measured moves for our objective while looking to catch the sellers on the wrong side of the market with each pullback into support for entries in the euro. We get a plan, guys, for crude, S&P 500, gold, and the euro. But before we jump into today's charts, though, I do want to remind you to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, there's a link right in the description of the YouTube video that'll take you over here to Sideways Markets. First of all, upper left-hand corner, you can grab a free pass, come out and test drive our live trade room as a guest. If you're not a member of School of Trade, I get a free pass for you guys in the upper left-hand corner. In the lower left-hand corner, there's a spot for your name, your email address, to register for our nightly newsletter mailing list. That way you'll never have to worry about missing another newsletter ever again. Just make sure you check your inbox when you verify your email address there when you register for that newsletter list. Right below the video tonight, you'll see a spot to download all of the charts that I'm going to use in tonight's video. And then over on the right-hand side, you can register for our trial membership. You can learn more about what it means to be a member here at School of Trade. And of course, you can always read real member reviews. And don't forget, no question too big or too small for us. We've always got someone standing by 24/7, 365 to answer all your questions. I think you know the who, what, where, when, and why. Don't forget, tomorrow is a Friday morning, Friday the 13th. Now, I'm not much of a superstitious guy myself, but Friday the 13th is tomorrow. We got a plethora of news on the calendar for you guys. They're going to unload in this tomorrow morning. 8:30 retail sales. You know, guys, my guess is that retail sales number, if that's a nice strong number, you're definitely going to be seeing a raise in interest rates, if not already in December. My personal opinion is that Janet Yellen's counting on a real strong retail season, right? You got some new phones from Apple. I've been eyeing that Apple Watch. Maybe for Christmas I might get it this year. We'll see it. Maybe my Festivus present will be the new Apple Watch. But we definitely get a bunch of big news on the calendar for tomorrow morning. And I have a funny feeling this holiday season is going to be a pretty strong one, that they're going to probably piggyback into that raising rates going into 2015. All right. Let's start up with crude oil. Crude oil is range bound this evening with a bearish bias. I know, looks like a trend, but you can see though. I think pardon the pun. It's a good crude oil pun. Pardon, they're running out of gas here as we go lower here. Yuck yuck. Sellers are currently trying to break to new lows. You know, we know the first attempt to break out of a range usually fails. If these sellers fail, we're likely to see a run back to the high of the range before we go lower again. Range rotation is the name of the game for the bears and the bulls tomorrow, and the buyers failed to rotate back to range highs, which means the sellers are going to try to run this price down to the next range expansion at 40.81, but watch if they fail, because if they do, this is going to shoot higher here and give us another shot here to get short up around these highs. When I look at this chart, there are ultimately four things that I would really pay attention to. First of all, you've got this long-term bear channel, and of course, we're looking at channel rotation. Right? So we have a channel rotation target all the way down at the low of that channel if we do push lower. That's one thing to keep in mind. So if we don't break the high of this channel, then we expect price to finish the rotation down to that low. Okay? So that will be the end-all be-all for the push down before we go back up and look for the run back down again, right? So channel rotation. The second thing that I see on this is this trading range. Right, we ran down today, nice big strong push down, profit taking gets interrupted by the news, and again, what it felt like is it went too high, really ran a lot of the sellers out of this market, and now it's kind of just range bound here right now. So we get a bearish bias to this trading range. The trading range takes precedence into tomorrow. The third piece of information. The third very important piece of information, measured moves. Measured moves, right? Now, when we're talking about a trending market, the key is major measured moves. I'm not too worried about these little tiny guys, right? So major measure move gives us support at 41.22. You're going to see how this all plays in just a moment. And then we have kind of this news candle measured move at 40.94, right? That'll put another area of support, right? Those big measured moves in this context are profit targets and areas where you do not want to be selling short into those measured move areas. When you have a trending market, you sell using channel rotation, measured move continuation, and then once we get to the bottom of the channel, we get to the measured move, we take our profit, wait for the correction. Now, the fourth and final piece of this puzzle tonight, which is what I'm expecting to be the big one, is the news candle. I want you to put, and we're going to see this again on gold, because gold, the sellers on gold that sold the non-farm payroll report a week ago, if they're not worried, they should be right now. Let's stay to crude right now, though. That news candle, that is the inventory report from today. I want you to think about, if you sold at 11 o'clock today and you're still short, where's your stop going to be? It's going to be right up above that news candle, right around 43. Now that you understand bearish channel, measured moves, trading range, the range takes precedence now. Let's think about range rotation. Okay, range rotation. We go from the low to the high. Tag, you're it. Remember this from last time? Right? Up to the high. Where are we going next? Down to the low. Tag, you're it. Now you got to catch me back to the highs. Oh, hold on though. What happened right here? Apparently the buyers did not play the game. So the bulls struggling to finish the rotation, we now get the pendulum swings equal amount down, right? So now we're expecting this bull weakness, right? The sellers will see that as bullish weakness, and they're going to try to run this thing lower. Let's anticipate they run it lower. More importantly, think of this as a pendulum, right? They run it up, can't get it done. They're going to try to run it down, right? Probably about the same amount. You know, those human beings, they're creatures of habit. God bless them. And so we know that we're likely going to see possibly a test of that measured move, right? That's about equal, okay? Now, here's the reality though. Now I want you to think about the sellers try to run it lower if they can't get where? Where's the next range down? Take this range, project it in the future, 40.81. They've got to get to 40.81. If they get to 40.81, then the range rotation just simply moves down, right? So we go down to 40.81, tag you're it, back to 41.69, tag you're it, back to 40.81, tag you're it, right? And we go back to range rotation. So scenario 1 is we do get to 40.81, and we then rotate inside the range that is now just simply shifted lower, right? We found balance, and we're now balanced lower. But here's what my gut tells me. My gut tells me we can't get that 40.81 done. I don't know. It's just a gut, right? I'm going to wait for the price to prove this to me tomorrow. But let's just play a little game called What If They Fail? What if they fail to get down to 40.81? Now where does it go next? Remember, pendulum swings, right? So they try to run it lower, can't get it lower, pendulum swings, we go back into the original range, and now we're gunning for 42.57. Try to run lower, sellers try, they fail, we buy it back up to 42.57. Now think about all those stop losses that are just waiting to be filled before that next push down. I know I'm going a little bit into the deep end right now. I know I'm assuming a lot here, but these are the scenarios that we can easily see happening. Again, scenario 1, we push all the way down, tag the 40.81, and then now we're rotating in that range lower. Still have a bearish bias, still looking to trap the buyers on the wrong side of the market to sell. But now let's say scenario 2, they can't finish the job. The pendulum swings, the sellers take their profit, and we launch right back to 42.57. Now those crafty buyers are going to try to run it even higher, right? They're going to try to run it up, run out those sellers. If they can't get to 43.45, what's going to happen? Right back down, pendulum swings, right back down in. This is going to be an interesting market to watch as we wrap up the week tomorrow for a Friday the 13th edition here. All right, guys? So again, watch for these sellers to fail. Watch it shoot back up into this range. They're going to start running for stops. Stops will be here. Stops will be there. Definitely think of that 42.57 as your price magnet. How are we going to do it? If it comes back in, I'm looking for seller failure, right, to buy that sucker back up. We go up, run those stops. The buyers try to buy it. They fail, and we're right back down again. We won't know what this really looks like until tomorrow morning, and we'll be trading this in real time together with all of our members. Let's keep going. Now we have our plan for the S&P. Now the S&P 500, a little bit easier. Still got some shenanigans we're expecting here right now. The S&P is bearish this evening, but the sellers have 2 measured moves acting as support, which tells us the sellers will likely be taking their profit, if they're smart, into the closing bell tonight. And we will wait for a bullish correction higher before looking for additional selling opportunities tomorrow. The short-term trading range from earlier today will act like a price magnet as buyers go hunting for bargains, but make no mistake, this is a bearish market, so sellers will be waiting for the buyers to finish this move higher for the next round of selling. So here we go. A couple things on this chart. First of all, we talked about on the last chart, we talked about range rotation, channel rotation, measured move rotation, right? Okay, now look what you're seeing here right now. Nice big bearish move. But what aren't we seeing? What don't we see on this bear channel? Rotation. Good, I'm glad you said that. Good, because that's exactly what we're missing right now. Joe, you told me in trending markets to expect range and channel, to expect channel rotation, right? High down to low, up to high, down to, we don't seem to be rotating. That would probably tell me that maybe we're not as bearish as we think we are. Okay, now let's go to the next batch of clues. Okay, clue number 1, lack of rotation. Got it. Clue number 2, major measured move. Again, did I say major strong enough? Did I emphasize the word major enough? Right? We don't care about these little tiny measured moves, right? I don't care about these little guys. I care about the big ones. Right? The big ones are the ones that take a few hours to accomplish. Major measured move, medium measured move. As you can see. So now, channel rotation, measured move, these sellers, again, if they're smart, they're taking at least a portion of their profit after a nice big strong day today. What's the third piece? Look at the volume. Look where the majority of the volume piled up, right about that 2060 to 2055, right? And that's where you've got your trading range. So we take some profit, measured correction, nice warm, fuzzy feeling when I think about that trading range, right? That's probably where this measured correction goes higher. I couldn't tell you, right? I'm anticipating tomorrow I'll wait for proof, just like you'll wait for proof as well. So this is where we have, again, I'll look the A, B, C, D, and then what's likely to happen here is that counter trend correction is likely to fool some buyers, right? Thinking this is going to be another bullish market, and it might be, let's be honest. But if they fail on that pullback, if they fail here, right back down. Basically what you're looking for is, we anticipate the sellers to take their profit. Again, if they're smart, we're not seeing channel rotation. We are seeing the completion of a major measured move. Oh, what else in this chart? That's about it, right? Volume, and a trading range makes for an easy magnet. So I would definitely expect stops to be run here, maybe stops to be run above 63.5. The bottom line is I'll easily, gladly step aside here, let this ABCD measured correction go, and then you know there are going to be buyers. There'll be buyers here trying to buy the pullback, and smart sellers will be waiting to see if they fail. If they don't fail there, not to worry, they'll run the stops again. They'll try to buy the next pullback, and I'll wait for that to fail, right? Remember, good things come to those who wait. At least we were told that, right? And we usually do see the best trades come when we stay patient on these markets. Make no mistake, though, guys, very bearish market right now on the S&P. They're going to really have to prove it to us if we're going to call this a bullish market after a rally tomorrow. I won't be surprised at all, though, if we see this market come up off these lows. Stay patient for tomorrow. Now, how about that gold? Boy, I'll tell you, we didn't think this party was ever going to end to the downside, but it looks like it's coming to an end right now. It looks like the easy money for the sellers is coming to an end. And I'll tell you right now, if you're a bear that's already in this market, you should definitely be worried right now. If you're a bear and you missed the move down, your Friday the 13th might be a fantastic Friday the 13th for you tomorrow because, well, let's kind of follow the bouncing ball here. Let's start back in the upper left-hand corner right now. Right? There's my non-farm payroll candle. That's a week ago, by the way. Right? That's last Friday's non-farm payroll number. One of the biggest news reports we get. And pretty much that was the nail in the coffin for Yellen and co. down at the Fed to raise these rates by the end of the year. Right? Remember that non-farm payroll number smashed expectations. We saw another JOLTS report today. So, okay. So, bottom line is, we just shot lower and then went into a trading range. Okay, no surprise there. Sellers were aggressively short this market, and now they're more timid, right? Now they're not as aggressive anymore because obviously they're already in this move. Now think about the range, right? The range is the most important thing now. We take that range, we copy it down, right? We copy it down. I always take at least 2 on both sides. You know, once you get through the second one, then it starts to get a little bit into la-la land, right? So we take the 2 below, take the 2 above. Okay, nice and easy. Range expansions. Now, tag your it, tag your it, tag your it, tag your it, tag your it. They try to go higher, buyers fail. What's going to happen? The pendulum swings. Wham! All the way down to 1076.3. The sellers tried again. Now look at this. Watch. We find ourselves right here now. Sellers are gunning for 1067.8, right? That's the next range expansion. They fail. Price shoots higher. Where's it going to shoot to? It's not going to go to 84.9. Remember, the pendulum's going to swing just as much, if not more, in the opposite direction, right? So it goes through 84.9 on the way to 93.5. Oh boy, can't get that done now. Look what happens, right? So they swing it lower. Oh boy, but look what happens here. Look what happens here before the end of the session today. Think about this. Put it in context. Sellers fail, the pendulum swings. Buyers fail, the pendulum does not swing. If the buyers failed to get back to 93.5, they should have easily been able to revisit those lows again. Easily, right? The pendulum should have swung all the way back down. This is supposed to be a bearish market. You see where I'm going with this now? So what should have happened didn't happen. We never even made it to 76.3. The pendulum didn't even swing. It just kind of went, just sat there, right? The pendulum is sitting there nowhere right now. So we missed the rotation to 76.3. What's going to happen? Again, sellers, if they're smart, are going to see this as weakness. They're going to start peeling off some profit. Buyers, if they're really smart, are going to attack this. Where are they going to go for? The pendulum should swing all the way up. They're going to rotate to 84.9, but more importantly, every buyer in this market right now has to have their eye on 93.5. This is where it gets fun. This is where it gets real fun because that's a measured move. So now we expect a measured move back up, follow the bouncing ball now. Now you're going to see why I say if you're already in this market short, you should be worried. But if you're not in this market short, buckle your seatbelts because you might get a shot to get back in this thing at a price that was what felt to be unattainable a week ago. So now we go to a measured move, right? We measured move back higher here. I know it's getting a little complicated, but remember, it's all range rotation. The pendulum swings when they can't get the objective fulfilled. The market's always going to try to make their objective. So the objective was to swing all the way down. They couldn't get the objective accomplished, and now they're going to swing all the way up. So we're likely to see that measured move. Well, what's going to happen with a measured move? Sellers will sell it, and if they don't get the rotation down to 84.9, what's going to happen now? It's going to rotate. It's going to swing all the way through, right? Sellers try, they fail, bam. We go back to 1100. Now, oh boy, now we have the vacuum effect. Now look at that big move down from non-farm payrolls. This is basically one empty space here. I've got stops sitting up around 96. I've got stops sitting above the big round number. There's a gap to get filled. And oh, baby, there's that NFP news candle. Because think about it. You're a seller and you sold that non-farm payroll news on Friday, last Friday. Where's your stop going to be? It's all the way up top here. So I realize we have a large jump to go higher, but guys, it's only a $25 move. That's pennies for gold. I know it's a big deal for something like Crude or the E-mini S&P, but this is not record-breaking material for a market like gold. Gold can move $20 overnight tonight, especially if these sellers go on a little max exodus out of this market right now. So now you can kind of see how a little bit of range rotation, a little bit of pendulum swinging, we may see by the end of the day tomorrow or possibly into Monday, we could have those sellers who didn't sell short now in an opportunity to get the same price that they missed last Friday. This is going to be an exciting one to watch. Again, I would assume at this point, it's great to be a buyer right now in this gold because we're probably going to find our way back to that 93.5. And then from there, we're going to wait to see where we go from there. From here, we expect price to rotate back to 84.9. But that's where it gets fun because if they can't push it back to 84.9, they're going to go hunting for stops. 1100, the non-farm payroll stops, and that's when the blood hits the streets. That's when every seller gets taken out of their positions. They're not going to be bullish after that. They're raising rates for crying out loud. They're going to be looking for a way to get back in, and so we expect to see another shot at a move back down, possibly next week. Guys and gals, right now, the most important thing is range rotation on this yellow metal. I can't wait to see what happens this market in the next few days. This is going to be really exciting to watch. And as you guys know, we'll be doing it together with all of our students here at School of Trade. Now, shall we finish up with the euro? The little market that could. This one's an interesting market. Pretty easy chart. This, I know, right? It's like, whew, finally, I'm glad there's nothing else like gold right now. There's a lot going on with gold right now. And remember, you don't need to trade gold by yourself. That's why we have a trade room. That's why we have our chat room. That's why we teach all of this in real time. That's why we do this. That's why I'm here talking about it. Now, finishing up on the euro, clearly we're bullish. Kind of interesting situation right now, right? You've got Draghi committed to literally unloading the clip, right? Negative interest rates, which, by the way, would somebody clue me in on how that works? Maybe give me a comment on the blog or send me an email. How exactly does this work? How do I get paid to borrow money from the ECB? Where do I sign up for that? Is this like Obamacare where I go on and like put my information in, I give them some money and they give me more money back? Right? Something like that? Like binary options or something, right? Somebody clue me in on that. How does that work? Because I love the idea of negative interest rates. I ask you for money and you pay me to loan. I love it. It's brilliant. Why don't we do that more? Somebody call Yellen and have her start that up. That sounds like a great idea. So meanwhile, you've got the euro with Draghi committing once again this morning to unloading the clip into the recovery process, right? No surprise there. And then we have what appears to be just the kind of the, twisting of the arm by Yellen and co. with the Fed here in the U.S. They've got to raise rates, right, before the end of the year, most likely. Nothing's guaranteed. And, of course, that's good for the dollar, right? If it's good for the dollar, it's going to be bad for the euro. So this is going to be a really interesting little market over the next few months. Very interesting. Now, obviously, I'm just speculating, right? This is all water cooler talk at this point. All I do every day is trade the chart. I purposely do not try to understand what's happening in the fundamentals because nothing makes sense out there in the real world. You go back onto the chart, everything makes sense. Euro is clearly bullish this evening, so our plan is to use channel rotation, major measured moves. See, you're finishing my sentences now. I love this. Trending market, channel rotation, major measured moves, right? Short-term corrections. Catch those sellers on the wrong side of the market. It's all rinse and repeat. Literally cover up the euro and swap this out for any other market you want. It's all the same stuff. Every market is nothing more than a group of people. And groups of people, when they're in a trending environment, they're going to give us, again, when you see trend, you think channel rotation. Now, I've got this pegged as a little bit smaller channel right now, but it may expand out to that larger channel high that I marked up there, right? So channel rotation, tag your it, tag your it, tag your it, tag your it. And I want to buy the low of that bull channel. That's my objective, right? So right now, I want to buy the low of the channel as we rotate back to the high of the channel. The next piece of a trending market, major measured moves. Again, the major ones are the ones you want to focus on. Don't worry about the small ones so much as far as targets go. What you want to remember is do not be a buyer in this bullish market into a major measured move. Take your profit there. Don't get into a new trade there. Okay? Now, what about for the plan for tomorrow? Well, we have a short-term measured move, which tells us that there's likely going to be a measured correction back down. Now, you know me, I like trading failures, so I look for the sellers to think that there's some sort of short trend going on here. They're going to sell that next, whatever the indicator of the week is. They're going to sell right there. I'm going to look to buy right in their stop losses, right? So play the sellers against themselves. Wait for that push lower. Then again, sellers are going to confuse this for a bearish market at that point. They don't watch this newsletter, apparently. They'll try to sell that next retracement, and if they fail, that's the juiciest buying opportunity you're going to get. Don't forget, 3 ways to trade this. Reversal patterns, counter trend failures, right, or trade the pullbacks. So you can A, wait for a reversal pattern. B, you can look for sellers to fail. Or C, you could just simply wait for the move to start back up and then buy those dips on the way back up, the channel rotation, right, and to measure measured moves. So bullish on the euro, wait for a short-term correction, catch those sellers on the wrong side of the market. Gold, I see you, 1100. I can't wait to see this market tomorrow and next week. And then, of course, on the S&P, couple big clues there, right? Major measured move. And again, I think the biggest clue is they can't get off that channel high. They can't get off that high, right? It's probably going to whoop, and then before we come back down, wait for proof before you sell that market. This market could definitely push higher, so wait for proof of those failures. And of course, we can't forget about the old crude oil. Again, look for the measured move, but look for the failure to get down to that 40.81, and then whoop, right back up we go. Again, this range is your key. If you need a review on that, rewind the video and go back and watch it again. Guys, what a great week. What a great week. Boy, does it feel good to be a trader right now. Best time of the year by far. We've had a great week. I hope you guys have had a great week as well. Don't forget, send me some feedback. My email address is jj@schooloftrade. Give me a like on the YouTube video. Share this information with a friend. All right, guys, and have a great weekend. What a great time of year. Don't forget, Thanksgiving coming right around the corner. We got a few more weeks left before that, and then we go into that holiday month of December. Boy, oh boy. It's great to be alive and a trader right now. Thanks so much for being here. Don't forget, join the free trial here at schooloftrade.com. We've always got someone standing by with our live support team to give you more information about our 3 levels of membership. Thanks so much for being here. My name is Joseph. You guys have a great weekend out there. Next newsletter will be Monday evening. I've taken too much of your time tonight, and I bid you adieu. We'll see you guys next time. Adios, amigos. Bye-bye for now.